morning, everybody. Great, I love this on a Monday morning. My name is Tammy Nkadibeng. I'm fondly known as the message architect because I break down and build words in order to progress humanity and society, and I'll get in a little bit into that later. So it's really is a privilege to be here, to be your program director for the next 2 days, and we do have 2 policy dialogues, so tomorrow I'll dabble in a bit of moderating as well on the policy dialogue too. But I'll help steer the ship for the leadership that is here and for everybody that is seated. So should you need anything, please find me in my little corner over there, and I'll try my best to assist you. So how did I land up on this stage? After 20 years of corporate, I decided to then pursue being the message architect, which is my calling. And part of being that is I land up being in rooms such as this. I've done World Bank, UNGA, you name them. In actual fact, a few months ago, Malume B and Mama Mish, so that's being Barack Obama and Michelle Obama, named me as the top 33 African leaders to watch out for. And it was such a privilege because I get to use my calling in order to advance humanity and society. So in the true sense, I looked at SA Tide, Southern Africa towards inclusive economic development. But I thought, I'm going to break it down my way, because we're going to speak about all things job creation, inequality, climate change, amongst other topics. This is by no means a platform where we're going to just debate, and we're going to also just bring up challenges. I implore you that this is going to be a platform where we show progress. Progress is not perfection. Progress takes time. But if you put one foot forward, then we actually get somewhere. This is a think tank. This is where we challenge each other in our thinking processes, but we show that there's evidence in what we have implemented. Now, you may look at society, well, I often do, and I think, there's so many conferences that happen around the world. I dare you, please Google anywhere and see how many conferences happen in a day. Why is it that humanity and society don't move forward? Well, I'll tell you this. It's not we lack conversation. We lack tangible outcomes that we can implement from conversation. And so it means the world to me to be in a room where we're using a place that is, evidence that is supported by data. It is evidence-based because it makes it simpler to then implement the objectives. But these things take time. And so for me, SA Tide for the next 2 days means some achievements take, can you believe this? Inclusive and earnest dedication. Some achievements take inclusive, earnest dedication in order to get them forward. So we'll be focusing on what the outcomes are so far in the progress of phase 2, and hopefully by the end of this then we'll know what the roadmap is then forward. Just a few housekeeping rules. If you'd like to see the program, please go to the door at the back. We have a QR code. Just scan that, and then it will give you the updated program. Also, as you walked in, you would have received a number. If you didn't receive a number, don't worry. At coffee break, I will remind you to please grab it at the back of the room. But if you did receive a number, please keep it safe, and I'll let you know what to do with that number a little bit later on. Don't swap it. Please keep the one that you have got. Also, please keep your phones on silent. You don't have to switch them off. In actual fact, I encourage you not to switch them off. And the reason I encourage you not to is we're privileged to be in this room. But if we want people to know about SA Tide, we need to take this conversation outside to the numbers and to multiple people. And in order to do that, I need you to please post as much as possible. All we ask you is to use our hashtag #SATide. Conversations cannot grow in numbers if they're stuck in conference rooms. So you're doing society a favor by posting and speaking about this so the conversations can keep growing. But to galvanize you a little bit, I will be giving a few prizes. I'll be looking at who's posting, and we'll give out a few prizes for those. It's not bribery, it's just encouragement. That's all it is, just a little bit of encouragement. And so I'm going to bring that to a wrap, And I'm going to close off with this before I start the program. One of my favorite books that I started reading when I started in the corporate world is by Robin Sharma. It's called The Leader Who Had No Title. And the reason I like that is what it allows us to be, it humanizes all of us outside the roles that we play. And so I deliberately am going to always introduce people here without their title, because if we're going to have level ground conversations, we need to do it human to human, not on just our titles and achievements. And so without further ado, please help me warmly welcome on stage, Kunal Sen.
That was an amazing introduction to the whole program. Thank you. So distinguished colleagues, honored guests, friends, good morning and welcome to Pretoria. It is both a privilege and a matter of some personal significance to be standing here this morning. Not simply because this conference marks a milestone in a program to which UNU-WIDER has been deeply committed, but because it's a vivid reminder of why this work matters. When I look around this room, I see senior officials from the National Treasury, the South African Revenue Service, international researchers, South African researchers, development partners, practitioners, and colleagues who have given years of sustained investment and intellectual effort to this enterprise called ESETIDE. And I'm struck above all by the quality of the partnership that we have built over this last several years. Genuine research policy collaboration of this type, of this depth, diversity, and durability is rare. And what has been achieved in ESETIDE deserves to be recognized for what it is. So to everyone here who has contributed to ESETIDE over the many years that ESETIDE has, both in phase 1 and phase 2, this is to you, to researchers, the data custodians, policymakers, and funders, and honest interlocutors. When the evidence is when evidence is somewhat inconvenient, you have spoken the truth. Thank you. This conference is about you as what it's for anybody else. The theme you have gathered here under evidence in action, advancing inclusive economic growth, is well chosen. It is not merely descriptive, it is in a sense an argument. It insists that evidence does not speak for itself. It must be acted upon. An action of this kind that does not happen by accident. It requires trust, proximity, and the willingness to sustain a conversation between the world of research and the world of policy, including and perhaps especially when the findings are inconvenient. This closed-out conference gives us an opportunity to take stock of the conversation as it unfolded in phase 2. To ask honestly, what did the research illuminate? Where did it land in the policy process? Where did the gap between evidence and action prove stubbornly difficult to close? And what does this tell us about how we should proceed? These are not merely retrospective questions, they are the questions that will shape what comes next. I want to say something about the nature of the challenge we are addressing here in South Africa, because it's easy to speak abstractly about evidence-based policy, and rather hard to grapple with what actually demands in practice. So let me give you a little bit of background on South Africa, which most of you perhaps know. And South Africa's economic challenges are well documented and in many respects formidable. Last year, the economy grew by 1.1%, and that is the strongest performance we've seen in economic growth since 2022, and encouraging perhaps that the reforms seem to be having some effect. However, we should keep in mind that over the last decade, as a whole, growth of GDP averaged 1.1%, which was below the population growth rate, which meant that per capita incomes have been declining over the last 10 years or so. Furthermore, the official unemployment rate stands at 31.4% in the final quarter of 2025. And among young people between the ages of 15 and 24, the figure reaches a staggering 57%. And South Africa remains, by most measures, one of the most unequal societies in the world. where the bottom half of the income distribution receives roughly about 5% of national income, and the top decile commands 2/3 of it. I'm not reciting these figures to be dispiriting. No, not at all. I'm reciting them because they are the very reason we are here. When the policy stakes are this high, the quality of the evidence base is not a technocratic nicety. It is a matter of consequence for millions of people in this country. As Nobel laureate Amartya Sen, who was also very much involved with the creation of UNU-WIDER, observed, poverty is a multidimensional phenomena, a deprivation of freedoms, capabilities, and opportunities. So not just low income, that prevents individuals from achieving their potential. That framing should give all of us pause when we consider what is demanded of the research we produce and the policy it's meant to inform. Policymakers work in constrained fiscal environments, navigating competing social priorities, managing structural reforms, and immediate political pressures simultaneously. They need more than generalities. They need granular, contextually grounded, actionable analysis. That kind that only can come from sustained investment in data, in rigorous methodology, and the kind of institutional trust that allows sensitive information to move carefully and securely from those who hold that information and those who are best placed to learn from the information. Which brings me to this particular model that Essetite represents. And it's an important model. And why I believe that it deserves closer attention and it perhaps has received. There is a persistent temptation in international development to treat the research policy interface as a simple pipeline. Knowledge is produced here, policies made there, and we of course have something where in between where the research might be absorbed downstream. But that model, as anyone who has spent some time in both sides of this interface knows, is largely fiction. Policy does not consume research as a way a machine consumes fuel. It is embedded in institutions, in political economies, and in essentially the professional cultures and institute structures of the people doing the work. Evidence lands differently or does not land at all, depending on whether the researchers involved understand the policy environment and whether the policymakers involved have the analytical capacity and institutional confidence to integrate and use what they're given. Essetite was designed with that reality in mind. From its very inception, the program placed deliberate co-production at its heart, bringing together South African and international researchers alongside government practitioners on both sides of the analytical divide, research and policy. And it was the center of its operating model. Not as a courtesy, but as a conviction that the most policy-relevant research is research genuinely shaped by the people closest to the policy need and stress-tested by those responsible for the implementation of policy. What has made Essetite distinctive is precisely that neither the research expertise nor the policy expertise has resided exclusively in one institution or even one country. It has been a genuinely shared enterprise, and that makes Essetite very special internationally. The National Treasury Secure Data Facility is one of only a handful of such infrastructure arrangements anywhere in the world, and only one of 3 in the African continent. And it's perhaps the most tangible expression of this philosophy of co-creation, co-production. The decision to make anonymized tax data available for research was not straightforward. It required political will, institutional trust, and technical know-how. That it happened at all is a tribute to the seriousness with which the South African government has committed to this collaboration and approach it in a way that has been extremely wonderful, the way we work together along with UNU-WIDER and SARS. Now we have produced well over 160 research papers, more than 2/3 of them co-authored by South African researchers. And it's a measure of what this investment that has happened over the years has yielded in terms of co-production. And we now know that increasingly there's a lot of interest in the South Africa model and SATIDE model, not only in sub-Saharan Africa, but elsewhere in other continents. And that's something that UNU-WIDER is committed to and actively engaged in trying to use the SATIDE model as a way to think of other country contexts and to make it replicable in other contexts too. So let me close with a few words about the road ahead, because a closeout conference, as it is called, is in some respects a misnomer. It closes out a phase, not a commitment. The policy challenges that brought SATIDE into existence many years back has not resolved themselves. If anything, the fiscal and structural pressures on South Africa have intensified in recent years. And a global environment characterized by geopolitical volatility, technological disruption, and the deepening consequence of climate change has grown more demanding. In this context, the case for continued investment in data infrastructure, in analytical capacity, and in human capital that sustains both is, if anything, stronger than when we first started with phase one. What we have built together, the data sets, the working papers, the institutional relationships, the cohort of young South African researchers, many of them are here in this room, and data scientists who've come together to this program is an asset, a genuine, durable public asset. And like all assets, its value depends on whether it is maintained, deepened, and intelligently deployed. UNU-WIDER remains committed to this partnership. We believe that the quality of a country's evidence base and the quality of its policy outcomes are not independent of one another. Getting that relationship right, making it function, sustaining it through changes of personal and priorities and political circumstances is painstaking work. It is also, in our view, among the most important work we do in UNU-WIDER. So I want to say a little bit, a few words about the program itself to close. So over the next 2 days, you will hear from South African international researchers and from policymakers and practitioners who are at the front lines of this work we've been doing in SATIDE. And they are both on both sides of the partnership, research and policy that I mentioned earlier. So you'll be invited to integrate this evidence, to challenge the findings, and to engage seriously with what they mean for the decisions that lie ahead. The most valuable thing for any of us that we can do in a forum like this is to say, with rigor and honesty that the subject demands, what we know, what we do not know, and what we need to find out. That, in the end, is what SATIDE has always been about, and what it must continue to be about in the future. Thank you very much.
Some really encouraging words there. It really sticks out to me. It's what we know, what we do not know, and what we still need to find out. I think it's a very key factor that you say, this is a close out to a phase. It's not a commitment. We still need inclusive, earnest dedication to get it to the landing point that we need to get it to. We're running a little bit behind schedule. Don't worry, I'm known for helping us to catch time, so we will catch time. So don't worry about it. But please help me welcome on stage next, Buipuso Modise.
Morning, everyone. Am I audible? Fantastic. I often have to do a fair amount of adjustment when I get to podiums owing to my towering stature. So that went more smoothly than anticipated. So let me start once again by welcoming everybody this morning. Welcoming my colleagues, the partners of the SATIDE program, our distinguished guests, as well as the friends of the SATIDE program. It's my pleasure to welcome you all to the Phase 2 Closeout Conference of the SATIDE program, and thank you for joining us over the next 2 days as we reflect on what has been achieved and what has been learned through this partnership, as well as what this partnership continues to mean for South Africa's policy and research landscape. This gathering brings together policymakers, researchers, technical experts, development partners, public officials, and long-standing partners to the program. Your presence here speaks volumes to the importance of the work that we've done together, as well as the work that extends far beyond any single project cycle or phase. As we all know, SA Tide is not a new initiative. It's a continued partnership that's grown over more than a decade. And since its inception and its formal launch in 2017, the program has established itself as an important component in strengthening economic policy making through evidence, data, and institutional collaboration. What makes SA Tide so important is that it sits at the intersection of three strategic needs for South Africa. The first is the need for high-quality research that is grounded in local realities. The next is the need for strong, adaptive institutions capable of responding to a rapidly evolving economic environment. The third is the need for trusted partnerships that mobilize expertise, resources, and innovative thinking. And SA Tide has delivered across all three of these areas. This matters because, as Kunal so eloquently put it, South Africa's economic challenges, including those of poverty, unemployment, and inequality, are complex and multidimensional. This means that they require both rigorous analytical foundations and creative policy responses to effectively address them. And SA Tide helps us to provide these foundations in a way that no single one of our institutions could do on their own. SA Tide's uniqueness, in many ways, lies in its shared leadership structure, which Kunal also spoke to. This is a partnership where senior government officials, leading scholars, technical experts, and developmental partners co-design and co-implement research and capacity building initiatives. This joint model ensures that the program produces high quality and policy relevant research. It also builds a pipeline of young economists, analysts, and policymakers with a strong emphasis on inclusion. If you look at the demographic makeup of the individuals who come through the program and the authors and co-authors of the research published. SA Tide has also indicated over time and demonstrated that it can shift in response to new policymaking challenges, macroeconomic shocks, including the COVID-19 pandemic, new research opportunities, institutional restructuring, and the evolving demands placed on the state, particularly in an environment of limited resources. Few programs have been able to balance long-term research agendas with short-term policy responsiveness, and SA Tide has done this exceptionally well. In reflecting on some of the successes we've been able to accomplish over the iterations of the SA Tide program, on reflecting on phase 1, which set a strong foundation for our program, we found new insights were raised in the spaces of firm-level performance, labor market and employment dynamics, public revenue mobilization, industrial and trade opportunities across the region as well. One of the most transformative initiatives from phase 1 was enabling access through anonymized administrative tax data, again, which Kunal reflected on, which positions South Africa as in many ways a global leader in the responsible use of big data and administrative data in particular for public policy making. The ability to work with firm level and individual level administrative data sets fundamentally changed our analytical capabilities as a state, but also contributed to this lens being put on the research policy and policy agenda. Phase 1 also deepened the collaboration between South Africa's institutions and international researchers, creating networks that still shape the policy discussion today. Reflecting more closely on phase 2, which we're currently closing out, we found that the foundations we built in phase 1 were still critical to the way that we worked, and we expanded on them significantly in the second phase. By way of this, allow me to elaborate on a few of these accomplishments. The first is a high quality body of research, more than 130 papers to be precise, which have been published and are expected to be concluded over the course of the closeout of the phase. At that point, we expect to have published 150 papers. And if we look at who has published those papers, we find that the bulk of them have been published by female authors, 63%, either female authors or co-authors. 65% have been published by South African authors, and 25% have been published by civil servants. This tells a story of inclusivity, of diversity, and of deepening local ownership of the research agenda. The second thing I'd like to reflect on is the importance and centrality of the SA Tide program to the Treasury and its leadership. An important development over the course of the second phase of the program has been the transfer of the National Treasury Secure Data Facility to the Office of the Director General of the National Treasury, following the establishment of the Office of the Chief Data Analytics Officer in the DG's office. This move reflects the Treasury's commitment to embedding data-driven analysis into the core of its work. Treasury has also allocated a substantial research budget to the second phase, and likely will do so in the third phase as we take the program forward. The third element I'd like to reflect on is how important data is in shaping how we understand our economy. Access to firm-level data has unlocked new insights into firm productivity, into innovation, into employment responses to policy incentives, and into structural trends within industry. Labor market data, meanwhile, has deepened our understanding of worker mobility, unemployment patterns, and inequality. These data sets now inform the design and evaluation of key policies, again, in an environment where trade-offs exist and resources matter, in an environment where we have constraints. The fourth element I would like to reflect on is SA Tide's ability to contribute towards capacity building at scale. Over the course of the second phase, more than 200 participants, half of them from government, have benefited from training in advanced areas such as DSGE modeling, econometrics more widely, spatial analysis, data science, and data science tools. This has strengthened our analytical capability of the state far beyond the program's lifespan and allowed for these skills to be embedded within the public sector. As I move towards a close, I would like to start to think about what phase 3 could look like. As phase 2 concludes, we're not closing a chapter, we're preparing to build on it, as we have done over the different iterations of the program. Phase 3 represents an opportunity for us to deepen institutional capacity, expand the use of administrative data for policy evaluation, strengthen cross-government collaboration, and enhance long-term planning through evidence-based modeling and analysis. The strength of phase 3 will depend on the continued commitment of all of you in this room, the researchers, analysts, policymakers, and partners who shape this work and how we do it. As we begin this conference, I encourage all of you to stay with us, engaging boldly, sharing your expertise, reflecting on the lessons learned, and exploring opportunities for collaboration while challenging one another constructively. These 2 days are a space not only to showcase the achievements of the program, but to imagine what comes next together. Your insights will help to shape the direction of SA Tide Phase 3 and its evolving role in strengthening South Africa's policy capabilities. In closing, let me express my heartfelt and sincere gratitude to the UNU-WIDER leadership, to our government partners, to our development partners, including the UK FCDO and the European Commission, as well as the researchers and analysts who drive this work. Let me take a special thanks to Yolandi Smith, who has tirelessly and painstakingly represented my office in its contribution to the SA Tide program. It is often very thankless work behind the scenes, and she's done it extraordinarily well. With that, I would like to thank you all for your dedication, your partnership, and your belief in the power of evidence to transform policy. I look forward to the discussions ahead. Have a great day, everyone.
I like the line, you all get to shape the next phase. So please all be engaged, all share your opinions, your thoughts, and it will be very encouraging for all of us in the next 2 days. So I believe there's a research that's done that says that people actually fear public speaking more than they do death. Now, I don't suffer with that. What I suffer with is I fear pronouncing people's names incorrectly. So I'm going to apologize in advance if I get it wrong. And it's because, to me, names are important. Your family takes time to name you. And every name has a true meaning to yourself. My name is Noma Tamsanga, which is Xhosa. I'm not Xhosa, just have a Xhosa name, which means fortunate. I'm married to an incredible gent whose surname is Nkadimeng, which belongs to me now. And so that means Sepedi borrowed. And I always say I live my fortunate God-borrowed life. Names have meaning. So I do apologize if I mess up your meaning. So we're going to go into the first policy dialogue 1, which is about navigating binding constraints, how South Africa sets policy priorities. This is going to be moderated by Nikiwe Bigicha. She'll be joined on stage by Ulrike Burton, Philippe Berger, Mamoketi Dijani, and Lisa Siftel. A round of applause, please, for our moderator and panelists.
Good morning, ladies and gentlemen. Am I audible now? Right, you would think I had a history in broadcasting, but no. Good morning, ladies and gentlemen. The mic is now on. Thank you so much, Tammy, for that introduction. My name is Nikiwe Bigicha, as has been said. And just to reference what Boipuso said about the Friends of SA Tide, it gives me great pleasure to moderate this opening policy dialogue as a long-standing friend of the SA Tide program since 2017. Now, the SA Tide program has done so much to elevate evidence-based economic policymaking in South Africa, as we've heard from both Kunal and Boipuso. My favorite aspect of this is especially in the intentional way that it's structured, to actively bring academics and policymakers together, not just in shaping policy formulation, but through knowledge sharing and debate in public fora such as this. So the research doesn't remain arcane and in ivory towers, it gets taken to people. This opening panel is demonstrative of that collaborative and intentional approach. Our topic this morning, I think, sits at the nexus of what challenges South Africa. In the face of so many competing challenges and policy choices, which one should get priority? The aim of this dialogue is to explore how South Africa navigates policy priorities when multiple economic constraints bind at the same time, and how different interpretations of those constraints shape policy choices and sequencing. As we've heard, South Africa continues to face several challenges simultaneously. And those challenges are well known. What is often more difficult, we think, in practice is how they are weighed against one another when they occur together, where emphasis is placed at different points in time. Which constraints are treated as most binding in the short to medium term, and how priorities are sequenced when progress on one front depends on movement elsewhere. So our panel has been introduced, but just to give you further context of how we propose to run this conversation, we're going to be asking 3 key questions. And I'm going to say them up front because we want you to engage on those questions as well as we have our discussion. It draws on 3 core constraint lenses. which are known to frequently shape economic policy choices in South Africa. Growth and productivity constraints, fiscal space and credibility constraints, and binding supply-side constraints, particularly related to energy infrastructure, etc. So our three guiding questions this morning are: which constraints matter most right now? What trade-offs do these constraints force? And finally, what does this imply for feasible sequencing? We have a very esteemed panel that's going to help us wade through that and tease through some of those elements. And they, in their expertise, by and large, represent some of those constraints by the research and the work that they do. They've already been introduced to you, so I won't waste any more time. And just to remind our participants that there'll be an opportunity as we conclude our discussion for you to pose questions to our speakers as well, because we've invited you here to participate in these crucial discussions that we hope to have over the past few days. Ladies and gentlemen, good morning. Thank you so much for joining us.
Good morning.
Don't be shy, Philly. Good morning. I'm going to kick off by zipping around the room, if I will, just as an opener, for your opening remarks. To you, Mamaged, I'll start with you. Which constraint feels most pressing from where you sit, and why? You press the button there, I've learned. You just push it up.
Okay, this one is live. Good morning, everybody, and thank you very much for inviting me for this conference. So, for me, the most pressing constraint, and maybe it is a perspective issue, is fiscal policy or fiscal room. So, South Africa has gone from a debt to GDP of 27%, 15 years ago, to now 78% of GDP. Debt levels themselves are not necessarily a constraint, but when they start to filter through into debt service cost, it becomes very, very constraining in terms of what it is that government has available to it by way of resources, and it starts to affect the rest of the economy as well. And we've seen debt service costs rise to less than 10% of GDP, to just over 20% of GDP currently. Not of GDP, but of revenues. And at a worst point, it was forecast that they would increase to about 25% of revenues. So this is an environment where for every single rand that the government can raise, a quarter of that would be used to service debt. And that really speaks to the constraining effect of debt levels on basically policy making, as well as the economy at large. What we also saw was your interest rates in the economy rising from 7% to north of 12%. So if you think about that, you're getting to a place where your macroeconomic stability is basically poked. So we had your real rate at around 8%, your growth rate at 0. That suggests that over time you'd be growing your debt pile at around 7% to 8% of GDP. So at that point, really that becomes the overriding consideration for every single economic actor in the economy. It starts to bleed into absolutely everything. So we were at that point, and that is where we are. We're on that margin. That suggests that if you're a policymaker right now, anything that you do cannot potentially increase that debt level. And getting on top of that constraint, your interest rate, your growth rate, that differential between the two becomes really the centering or the organizing principle, essentially, of reform.
All right. Lisa, let's bring you in here. What's your perspective?
Thanks a lot, and thanks to SA Tide for inviting me here this morning. So I think I'm going to come from a different place, and we did meet with Nakiwe last week, and we were given opportunity to prepare. And I should have looked at the SA UNU-WIDER website to see all the research that you did, and unfortunately, I have to confess I didn't. But I did look at the News 24 on-record conference that was held last week, and in my mind, I have to say the first key constraint is politics. Dele or Leje, I'm not sure if I'm going to pronounce him right here, and I'm a bit intimidated after what the program director said. But he said politics eats economics for breakfast, lunch, and dinner. And he said if we don't get governance right, it will be very difficult to get anything else to work properly, and that includes the economy. And then there was a commentary by Quinita Hunter, who was even more harsh, and she says politicians see business not as something to nurture, but as a target to destroy. I think that is a bit too harsh. But yes, I think we can agree that politics, rampant corruption, uncaring leadership constrains economic growth. But why is it that the politics eats economics? Why is politics so transactional in our country? Why is it so captured by patronage and to a lesser extent clientelism? I think there are many factors, and I don't want to be reductionist. But in a country where there is such unequal access to resources, politics is a significant gateway and a pathway to income and opportunities. And that's why I think the second and core structural constraint is inequality. And despite significant efforts at income redistribution, we have not been able to shift the underlying structures of economic power. So the second part of the question was, what does it mean for policymakers? And as you debate over the next 2 days, is that not a question to ask? Can we do the same things and expect different results when tackling inequality? And secondly, how do we incorporate this current political balance of forces into policymaking? In other words, how to avoid being eaten up for breakfast.
All right. Ulrika?
I had a prepared set of comments to make, but just based on Lisa's input.
Yes.
I'd probably sit in the unenviable position of having to kind of take political problems and find technical solutions to it. Or where we think that we could take technical problems and hopefully they could, or technical problems and find political solutions to it. And the thing around all of this, I suppose, is you don't really have a choice. Is that, all of this, while you probably can't say what is more pressing between, I don't know, inequality, unemployment, growth, fiscal policy, and all of those things. It's a little bit of everything, and they all impact on each other.
Sure.
So what are the technical things? And because I suppose I've been in this game long enough to kind of think about what these technical games are that we play to kind of force politicians into making decisions. Sometimes we succeed and sometimes, most of the times we don't, but the point is that there are levers around all of this, and it's about how do you use that to kind of, both from a research point of view that changes the narrative, but also on finding that sweet spot between timing, the opportunity that allows you to pull those levers that forces decisions to be taken. And to do all of that, in the context of how you think about growth, fiscal policy, service delivery, or the supply side constraints. We, in the Treasury, we've done something, I think, quite remarkable by saying that there are 4 pillars. These are the 4 pillars that we are focusing on around growth. And they are all interrelated, because to deal with the supply side constraints, you're not going to get water to people if you can't kind of get the bitumen out of the harbor, or out of the refinery. And understanding those linkages matters a lot more. So what is the end game? What are you trying to do here? And how do you kind of work it backwards that allows you to sequence it in the context of what you have to do in terms of growth and inequality from a fiscal policy point of view, and how you use those fiscal levers to deal with supply side constraints.
All right. And then Philippe?
Thank you. So in the late 90s, while I was doing my PhD, my supervisor used to remind me, when you always think you have a solution, he always said, remember, it's never just one thing. So problems are very complex, and in South Africa, yes, it's growth, fiscal, supply side. We can even add demand side issues. I think that also plays a role. But I think the one overriding thing would be growth. We are very happy the growth has stuck its head above the 1% level. But I think if we really have a look at it, we see that it's very dependent on the vagaries of a commodity cycle. And that was in the mid-2000s when we had growth rates of 3 to 5.5%. That was the case back then. Now too, there's the platinum group of metals that has picked up a bit, and that's given us a bit more growth. So and then on the downside also, of course, we have the other vagaries of the commodity like the oil price hitting us now and probably going to dump it back below 1%. So I think that the one challenge would be how to get commodity cycle proof growth, and how you can get growth that is long lasting, generation long sort of growth, and that's not so dependent on commodities. And that then goes to that next step of looking at the supply side constraints. We know about all the bottlenecks. I mean, the Treasury colleagues here would know better than anybody else about how to address some of those things, with Operation Vulindlela. But the electricity thing is of course, it's better than it was in 2023, but it's still very fragile. And we have a lot of power stations that are supposed to retire in the next decade or so. Are we on track to replace them with green energy? How do we deal with that? So, and then water. For those who live in Joburg, I don't need to say more. So that is, and we have a growing population. So that is I suppose Operation Vulindlela's next project to add would be one on water. But have we thought about the bigger things like should we be going for desalination and big questions like that? A critical point, I think, is local government service delivery, because a lot of this comes together at the local government. You are not going to invest in a municipality if the water supply and electricity is not good. Whether it's Lichtenburg or Joburg, we've seen that, and that ties back to the politics, but also, of course, the corruption issues. We talk about transport mafias and construction mafias and water tanker mafias. So all of that needs to be addressed if we want proper investment and investment to drive a lot of it. There is, of course, then, so all of that talks about how to lift the growth trajectory so that we can have move it above 1%, and then have that spill over into decisions to invest. Of course, that then brings in things like the fiscal constraints. The government doesn't have much room to borrow to fund a lot of this infrastructure.
Yeah.
So we need to look at new models for that.
All right, so our panelists have set the scene for us in what they think the binding constraints are. I didn't necessarily get prioritization there. There seemed to be the tension that sits between all of them taking place at the same time, although Mamokete was quite specific about the fiscal space and that being a focus for her. I'll start with you, Philippe, because you've given us a very, very broad picture. Let's start to respond, in a sense, with the level of fiscal space that we have to move, which Mamokete touched on in her opening remarks.
Yes. So I think there's two. We call this the twin sustainability predicament. So on the one hand, you want sustainable development, and that is also something that comes from South Africa's very progressive constitution. It talks about the progressive realization of socioeconomic rights. So it's health, housing, transport. Now, that, of course, development has many aspects, like literature teaches us, but the material aspect is one of them. And having more healthcare, more housing, more this, more that is key. But that stands then in stark tension with sustainable fiscal policy. And so is it an either or? And I would argue no, it's not an either or. You really do need both. You need sustainable fiscal policy, but you also need sustainable development. You can't have the one without the other in the South African context. So what does that mean? Well, underlying all of these things is the third sustainable thing, and that is sustainable growth. Because if you have sustainable growth, you will generate the resources that you need to help you realize these socioeconomic rights. But that also gives you the resources to run a sustainable fiscal policy. So growth is very often, and we've seen this every year for more than a decade, you know, when the budget comes out, the growth projections have always been over-optimistic if we then compare them with the outcome a year or two later. So that to me is an indication that we need to look at growth. So I would put growth as the number one thing that we really need to get going. I think, and here we need to talk about what do we mean by sustainable growth. And I would think that we need to look at as I mentioned earlier, a growth that is commodity proof, growth that we talk about something that's sustained for a generation or two. We've seen that in countries, the Chinas, the Chiles, Singapores, the Koreas, the Indias now, where you maintain a high growth rate for quite a long time. So the question is then, how do you get to that growth of let's say 3-4%? Because the evidence the literature shows us is that between private sector investment, private sector investment to GDP ratio and growth, there's a link there. There's a statistically, econometric link that we see that you can measure. The other link that we see is the link between economic growth and employment growth. From 2010 roughly till now, the economy is about 21% bigger. There's 22% more people employed. So there's almost a one-to-one relationship there if you look at that. So it's not rocket science. We need investment to get the growth, to get the job growth. And that hopefully will contribute to reduced inequality. But the question is how do you get the investment going? So we all need we need the investment. So in that sense, I think what we really need to talk about is concerted effort. So we need the lifting of the blockages. That is key. Yeah. But how do we unlock the investment? And here I think what is really important is that we look at new models because the government's finances are constrained. So how do you mobilize more resources for infrastructure investment? And for business investment? We know that there's a 1.5 trillion rand on balance sheets, but how do we get companies to actually invest that money? People, we know the problems with I work at a university, so we are more than conscious about all the funding problems of higher education. So how do we get that going? Schools. So I think that we need to look at your big infrastructure funds where the private sector can put funds in. Dedicated funds, maybe not just one big fund, but one that look at the harbors, one that looks at roads, education, universities. So I think a lot of new work, and maybe that is something for SA Tide 3 to look at, would be to say, okay, what models, finance models would be available to get that going.
All right. Let's pick up on what Philippe has said to Mamoketi on the growth, the sustainable growth that is required in South Africa, and not having this over-reliance on the commodities cycle, so that it does translate in the ways in which we've been talking about for decades to jobs as well.
Yeah, so I think Philippe talks about a growth that is not as reliant on the commodity cycle. I don't know that you can eventually get there, because if you have the sort of wealth of commodities that we have, there is that delta. You probably can't do anything about it. It's just built into how we're resourced. But what you can get to is a model that smooths out the cycles a bit better, so that you get less of a down cycle when you have a shock on the commodity side, and you can cushion yourself in that way. And it's this idea, I think, that I remember hearing about it in the latter part of Trevor Manuel's term as finance minister, and you've seen it, other countries do it, where you build some sort of a fund so that you can actually save up and you smooth out your fiscal policy so that it becomes less cyclical. essentially. So that cyclicality, there are ways in which you could manage that, right? And then you take those resources and you actually mobilize them more effectively. So probably what we've struggled with in South Africa is to effectively mobilize the resources that we get when the commodity cycle is in our favor. And we've eroded our buffers by massive margins over the past 15 years, which just makes us so much more vulnerable to shocks. So I think we're in the process of undergoing yet another shock. We don't know where it's going to land us. But right now we're going in, we've eroded so much of our buffers. In the last one, it's going to make it so much harder for us to get through the next one. So one would like to see, and I think this is speaking about fiscal policy, speaking about what reform looks like within that space. There is currently a debate about a fiscal rule. We're probably going to get one at the end of the year or in October in the MTBPS, hopefully, what that should look like, what that structure should look like. I saw there is an SA Tide report in one of the leaflets that we got where they have a brief discussion around this very issue. What does that look like? Is it institutional? Is it numeric? But I think that is that's the fiscal reform that we really, one of the things that will be a pillar of the fiscal reform that we should maybe look at. And that then makes us, more resilient through different cycles, and hopefully then we invest that money in a way that, you create more diversity within your economy, and in that way you become more resilient.
I think I'll bring Ulrika in here on the question of fiscal reform.
I just needed to switch it on. There's a couple of things that you want to think about around all of the stuff. I mean, the first pillar in our growth strategy is around macroeconomic stability. And linked to all of that is, it's not just about kind of saying that, it's not just government debt as a percentage of GDP peaking this year, inshallah. It is also about what do you do, and there's important metrics within all of that. Debt service costs is not the fastest growing expenditure item in the budget. Debt service cost is no longer the largest expenditure component in the budget. And that creates opportunities, and with those opportunities, you're thinking about this and how that then links to some of the structural reforms and how that fits into the infrastructure landscape. So let's talk about what's happening on the infrastructure budget, on the infrastructure system. One, to deal with some of these structural reforms, it is around how do you restructure electricity or the energy sectors and the transport and logistics sectors. And by doing all of that, you're saying that what is the scope for PPPs around all of that? And there's a financing component in that. It's quite important for how we think about this in the budget. On budget, it is what are those levers that you have that improves expenditure and the quality of expenditure. How do you change the composition of expenditure so you go from kind of consumption-based into some investment or greater investments? Payments for capital assets is the largest expenditure or the fastest growing expenditure item over the 2026 MTF. Then in that context, it is what do you do from a grant reform? So on budget, what are the behavioral changes that you have to do because these things are conditional? So what are you changing within the conditional allocation system, both for national government, so how we kind of treat Transnet and how we treat Transnet in the budget, versus what we do about those conditional allocations that we make to local government. And then the last component is how do you increase the financing pool around all of this? So changing the contingent, changing the way we think about some of these contingent liabilities with PPPs and taking it off the sovereign balance sheet. So unlike in the independent power producer program where a lot of those guarantees sat on the sovereign balance sheet, the establishment of the credit guarantee vehicle then takes it off the sovereign balance sheet. Mm-hmm. That creates a lot more fiscal space. Yeah. Together with some of the expenditure efficiencies that we're starting to see, and we started small around focusing specifically on how we think about main budget expenditures, the inefficiencies, program rationalizations that needs to happen around all of that, that creates the fiscal space, that not only contributes to the objectives around macro stability, but also around what it does to, one, increase investments in infrastructure, that then unlocks the supply side constraints that you have within the economy, but also how do you use those levers to kind of de-risk what's happening on the balance sheets of state-owned companies.
All right. think I'll move us on then to the second question that we want to delve into. And Lisa, I'll start with you because you got us started on this route of governance. And what trade-offs do these constraints force? In a situation that has been described here about this, a delicate juggling act within limited fiscal space and limited resources and where the focus should go, there is a frustrated South African public. They're not getting service delivery. How then, what are the trade-offs do these constraints force in that climate? And you've already painted a picture for us where there is a lack of trust in leadership because of some of the controversies that we have seen.
No, thanks for that. And maybe I want to answer it in two different ways, and not necessarily to be able to say it's this trade-off or that trade-off, but to say, how could we do both? And I suppose that comes to the last question about sequencing. But I think we've talked a lot here about the issue about addressing blockages and supply-side measures. But I think if we only do that, it's not enough. We also have to look at asset redistribution. We have to look more harder, and I hope some of the papers look at it, around transformation, black economic empowerment, inclusionary housing, more credit for emerging businesses, skills development, and land reform. So I think that's the one thing that we should not trade off against the other. We need to look at both. The second issue around, I suppose, around trade-offs is that who are we trading off and who are the constituencies? And, you know, it did come up a little bit in the beginning, but I think that one of the issues we're facing in South Africa is the sharpest tension is not necessarily between organized business and organized labor and government. They are becoming insiders. In a sense, you know, there's something about the GNU that has definitely worked in having a consensus around a reform kind of scorecard and approach. But we can't wish away the outsiders, the underclasses, the gangs in the Western Cape, the taxi industry, undocumented migrants, illegal miners, contractor non-standard workers, informal traders. And we need to think, but when we make policy, that we also look at those. When we collect data, you know, are we collecting? Are our statistics counting the uncounted and the uncategorized? Are we looking in our stakeholder analysis at, you know, those people and how they impact on particularly the sequencing and ability to implement policy? Thanks.
All right, Mamgedi, let's get your perspective here on what trade-offs do these constraints force from your perspective?
So one of the things that's been discussed, and I think it's going to be discussed later on in the process, in the program, is around who then gets to invest in infrastructure. It's one of those things that I think it has been playing at the back of my mind around where does capital sit, where is there capital to deploy. If it no longer sits in the state, and that's kind of the consensus here, and it's sitting in the private sector, what kind of investment are you going to get? Because what kind of incentives is that capital responsive to? What does that mean about the balance of infrastructure that you have in the economy? You have social infrastructure. How do you get those profit-motivated investors pulled into that as opposed to the profit motive? One of the things that we were discussing now is around Transnet, and I remember having a discussion with one of the rail experts, and he was talking about how the system actually works because there's cross-subsidization between different lines. So what do you do when you're now pulling in private infrastructure? It's going to go and capture the rents on the most profitable lines. What happens to those models? So it's not to say this shouldn't be done, but it becomes incredibly important that we design policy in a way that recognizes these challenges and maintains the redistributive impact of that. So that is one of the constraints. The large-scale privatization of each and every service in South Africa is something that we need to think about. And I suppose, Lisa speaks about who's the included and who's excluded. And as we go into this with the fiscal challenges that we have, given that I think the past 30 years, politics notwithstanding, have actually had very distributive policy, very progressive, design. What does that mean going forward? and how do we solve for the new tensions that will probably arise.
I just want to follow up with you very quickly, Mamuketi, on capital and the need to invest in infrastructure in South Africa. There have been concerns in the past that business was not sufficiently coming to the party. Has that changed significantly?
So, I mean, for me, I think business has it operates in a very simple way in some respects. Business responds to profit, and it responds to its alternatives. So in the area where I sit, investment has been going into government because government has been borrowing so much at such high rates. So if the hurdle rate is 8% real, there's very few opportunities in an environment where growth is zero that are going to fulfill that. And that's what has been competing with capital, right? So I don't know that businesses have been hoarding capital so much as the economy has been ex-growth, and therefore they've been finding alternative ways of investing, including borrowing to National Treasury at very, very high rates. As we go forward, and that changes hopefully, inshallah, and you actually get a higher growth rate and you have lower government debt, those incentives will change. And we actually started to see a little bit of a shift. And I think if you can unlock those constraints on growth, energy is one. We have not even spoken yet about that inclusivity that will itself probably drive a higher basis for growth. You probably will pull in more capital. So I'm not particularly fussed about, capital just sitting out because they're just being, obstinate or whatever. There are real challenges around that.
All right. Philippe, you got us started on this conversation about the importance of investment in infrastructure as well. It's something that you touched on. And for you, what trade-offs do these constraints force in that climate?
I think it's, particularly if you look at government's expenditure. So, and I'm going to give you an example. A couple of years ago, Krige, myself, and Estienne Carlos did a study on, let's say the gear years. And one interesting thing was that as a result of gear, yes, we brought down the debt GDP ratio. But what was not always seen is that during that very same period, the fixed asset of government, that fixed capital that you can get on a quarterly bulletin to GDP ratio also came down. So in a sense, what we did during those years, we reduced the debt, but we didn't improve the balance sheet. And so that is the trade-off. And we are at the point where we can't really cut our capital expenditure much further. The deficit is already bigger than that. So we need to look at that very tight spot where you look at your current expenditure and the difficult trade-offs there, because you need to fulfill these socioeconomic rights. But on the other hand, for the current generation, but on the other hand, you need to create the basis for realizing the socioeconomic rights of the next generation. And for that, you need investment to get the growth, to get the resources to provide those things. So I think that is the tight spot where we are, particularly in the budget, where that sort of trade-off. And I think that is not just a government decision, that is actually a debate we should have in society, is, when we talk about what resources are we going to set aside for now and for later.
All right. Which leads us, I think, quite neatly into the sequencing discussion then, Ulrika. Having defined what the trade-offs might be, what the constraints are, what can, in your view, realistically move first, and what must wait?
Okay. The point is that I think around all of this is that you want to build sufficient momentum to have long-lasting effects. So what are the low-hanging fruits? Do you have a coalition of the willing and the competent? And if that coalition is diverse enough, lots of things can move at the same time. And the thing around if you look at this in the context of reform, it is always about what are those big ticket things that where you do have a coalition of people who allows you to kind of build the momentum that you need to do. Because if you don't have that, it doesn't matter what the analysis is and how much research and how much evidence you have. You need to get the decision makers to kind of see things in a specific way. And there's a sweet spot, I think. I don't know if we always identify it at the right time. But it is one where you use the evidence that you have in whichever way, wherever it is, where the outcome is obvious. It helps build the trust in society. And you use that then to kind of build, one, it changes the narrative and it changes the tone of the conversation. And you use that to kind of get to the next step. So the program director spoke about going for progress, not perfection. Yeah. And that's what you do around the sequencing, because you're never quite sure what it is. So I don't have a direct answer around all of this, but it is within those kind of 4 pillars that I'd spoken about earlier, it's a little bit of everything everywhere, depending on who is in that coalition. And even though the results look small or they are insignificant or people are just underwhelmed by it, the point is that you want to, in the first round, it's about how do you use that momentum to get to the bigger output. And I think we have really good examples of how that works out in the cases of, I don't know, in Operation Vulindlela, for example. There's some really good examples in that about what that is. And I think the big thing around all of this is that it builds the trust that you need. And that's really what you want to get out of that, at least in a reform context. The last point I want to make is around understanding that trade-off is who loses out in all of this and what do they lose and what are our tolerance levels around that loss. And if we understand what that is, then we're able to kind of mitigate for that as we build along. That makes the circle bigger. Thanks.
I just want to follow up with you on Ulrich, on the example that you made about Operation Vulindlela, to the extent that which it has been a success when we talk about reforms. I think many South Africans observing this see that things can happen, actually, when there is a coalition, as you so beautifully put it, of the willing and competent. Why is it that we have to wait until there is a crisis in order to get things working in South Africa? I asked this plainly around the success that we've seen of Operation Vulindlela. When you look at our energy shortages, which were identified many, many years ago, when I was still a reporter, we were talking about electricity crisis. It had to get to a particular point before there was something actionable being done. We're likely seeing the same thing with the Water Crisis Committee. How is it that we can't replicate a model like Operation Vulindlela across the board?
I suppose it's not a one-size-fits-all approach. Yeah. I mean, you know, institutions matter, organizational maturities matter, people matter, and if you don't have the right coalition or the right kind of coalition to make that happen, then you don't get it. I suppose when you're sitting on the inside and you're looking out, maybe public servants are a little bit detached from one. There's a natural instinct to kind of, you're worried about what you're going to lose if you try something differently. And maybe that's a natural fear. So when maybe we didn't think that the crisis was as big as it is. The thing about infrastructure, and water is maybe a good example, is that you can neglect it for many years, well, that's what the engineers say, and you won't realize there's a problem. And then you hit the cliff. So when you don't have the kind of technical savvy and you don't have the right kind of tools that tells you that there's a problem early enough. So what are the early warning systems around all of this? Municipalities and very poor municipalities don't spend enough money on maintenance, and they can get away with it for years. And it's only when they hit that cliff then you realize that's the problem. And I suppose that's what it is. The other thing around all of this is that the incentives in the system don't work the way they should. At least in the public service regulations, they don't work in the way they should, because it doesn't tell you that you need to have the intelligence you need to make the right kind of decisions at the right time. It's almost like you wait. And and there's something within the evolution of how you think about public service from almost a rules-based system into a governance system with accountability and authority, and where there are those mismatches between accountability and authority, you only see the problems when it's a little too late.
All right. Thanks, Ulrika. Philippe, I saw you motioning to respond.
So I think the other thing is also, as a country, we have been enamored by these big plans for many years. It started off with the RDP and GEAR, we had ASGISA, then we had the National Development Plan. And the difference with Operation Vulindlela is it's focused. It's not this all-encompassing thing. It says, here's a problem, what are we going to do about this problem? And I think we actually need more of that. We would rather need a menu of more focused, diverse, it's almost more a pluralist approach than one big answer or theory of everything type of thing. And I think that is sort of the direction in which, and that is maybe one lesson we've really learned with this, and I think that is what we need to take forward. So please, no new big plans.
Whilst we have you on the floor, Philippe, to the question that I posed earlier about sequencing, what can realistically move first and what should wait?
So there's supply and demand side stuff here. So on the supply constraints thing, I think it's critical that we have a conversation about the right models to finance these things. So it's ironic, we were one of the first countries having a fully fledged public-private partnership thing in the late 90s. I was involved in that. It was, as a young scholar, one of the first things I was involved in. But we need those sort of conversations again. How do we mobilize? How do we get workable models that really bring in everybody as a partner? And we need to get that going. On the demand side, I think there's another issue. So we need to think a bit further. How are we going to create demand for the stuff? So we talked a lot about exports and export-driven growth. We know that the unit labor cost is not playing along with here. The productivity doesn't match the wages or vice versa. But I do think that instead of thinking overseas, we need to think overland. We really need to think about, using the African Continental Free Trade Agreement, the SADC. SADC has about 300 million people living in there. If only 10% of those people join the middle class in the next 10 years, that creates enormous markets. And I think, but for that, we need to look at those bottlenecks. There's, your trucks shouldn't stand at a border post. We need to have trucks going and coming back with stuff and not coming back with empty, so we need to look at all of those things, and that needs to be happening in partnership with our neighboring countries. But that is how we need to loosen up because we do have skills that other countries around us do not have, and therefore a bit of a comparative advantage. So I think on the demand side, that is where we need to look at that. That's the first things, and then we can start looking further.
All right, Katie.
So I suppose, I was listening to the discussion earlier on about, infrastructure decays over time, and then you go over a cliff. We saw that with electricity, we saw that with power, or with municipal infrastructure now. And I think the note I'd like to make is the decision not to invest in maintenance is a decision. It's not an accident. Infrastructure degradation does not happen to you. You make choices that lead you to that. So I think it's important that we sort of say, we are here because of the choices that we have made. And we have to make different choices going forward. And the thing about, for me, is that, Ulrika speaks about low-hanging fruit. She speaks about, how we think about what we should be doing from a policy perspective. And it's not clear to me. We talk about fiscal constraints. And I think South Africa hasn't been particularly, there are fiscal delinquents out there. We're not the worst fiscal delinquents by any stretch of the imagination. We're not, fiscally, we've been dodgy past 10 years, but we're not, I think our fiscal situation is a result of decisions that are made upstream. it's really a function of the fact that we haven't really been growing that well for 15 years. And that the question is why have we not been growing? It's because of certain decisions that we've made and certain decisions that we failed to make. So in terms of what are the options that we've got at the table, there are options that don't cost any money from a policy perspective that we, in theory, should have made, and we should have them on the table at the moment. And I look at OV, and I think OV is fantastic, but it feels like it lacks ambition in the extreme. So if you think about what is our challenge, we have an economy that excludes a lot of people. And it doesn't feel to me that we're making enough of an effort to really address those structural challenges. There's a little bit in OV2 around spatial planning, around getting people moving between spaces a bit more efficiently. But maybe that's what we should be looking at, is like saying, what does our economy look like? What do we want it to look like? And this incrementalism that we currently sort of cycle that we're stuck in, I don't know that it's particularly helpful. Right. So, yeah, so for me, I don't know I don't know that I know what the solution is, but we've got product market challenges. There's a lot of work that SA TIDE has done around labor policy. There's a lot of work that's been done around access to economic opportunities, funding small businesses, and we know that those constraints are not financial, so they sit elsewhere. So I suppose I'm confused, but I'm saying this is not enough.
All right, we'll give Ulrich a chance to respond. I just want to touch on you, Lisa, on this final question and get us thinking around sequencing. What can move first and what can wait?
Okay, so I think I want to say something positive and then I want to say something disruptive or provocative. I think, and it comes to what I was saying earlier on about, that we need to do something differently. And one of the things, particularly around, we talked earlier on about commodities, and is commodities an opportunity or not an opportunity? And I think one of the things that we found in South Africa is we think, yes, we must do mining, yes, we must do just transition, yes, we must do reindustrialization, yes, we must do global business services. Even if it's not the right one, let's choose a winner. Let's make a winner. If we're going to say mining sector is our path for growth, and we're going to take the best advantage of the commodity boom, let's do that, and let's put our other reforms sequenced behind who we want to back as a winner. So that's the first point I want to make. The second point, which is about this debate about OV, and are there limits to it, or is it unlimited? And to some extent, I think that what has been able to happen around OV is that a certain nature or grouping of elites within our society see it as an opportunity and have supported it. But there's a limit to that, and we saw it recently with this debate about the transmission company, and at the end of the day, the president had to go against the minister responsible for energy and say, this is the route we're going to go. But in many other areas of society, including water, there was some reference to water mafia. But the big problem at a local government level is that elites are not aligned to the same reform agenda that the national government is aligned. It's much more about patronage. It's much more, because what I talked about earlier on about binding constraints. So one of the other things that we have to think about in sequencing is that we, again, everybody says we must clean the state, we must stop corruption. It's not going to happen. You'll clean the state today, and they'll, it's like cooking. You clean the kitchen today, the kitchen is dirty again tomorrow. Unless we address some of the, as you've talked about, the problems of outsiders. And if we don't have strong law enforcement, it's about inclusivity. It's about trust. It's about relationship building, which is a different kind of politics.
Sure.
Thanks.
All right. Ulrich, I'll give you a chance to respond. I just want to remind the audience that we're about to wrap up. By show of hands, if anyone would like to raise a question, please raise your hand and we can arrange for the microphones to be circulated to your side of the room. I've identified 4 hands already, and I'm afraid because we've only been allocated 10 minutes for that, 10 to 15 minutes, that's all we can take, I think. If during the tea break you find the panelists, please by all means pose your questions to them then. But let's try and zip through the 4 that have been identified so far. But Ulrika, very quickly.
Yeah, I mean, I think different problems require different solutions. And, you know, as successful as OV is in relation to what it's done in transport and in energy, I suspect it's going to be a lot harder when you get to local government. It's just because you have so many different institutions, they're just different machinery. Last week at the Metro Trading Services launch, everybody reminded us that local government is complex, metropolitan governments are complex. Even within metropolitan governments, they're very different. You can't compare Joburg to Ekurhuleni. And then that requires different solutions in how you think about all of it. One of the things that kind of strikes me about some of the issues around those who are losing out, those who are outside, relates to how we think about where capacities lie to respond to that. 20 years ago, somebody made a comment when we were talking about breaking new ground in human settlements, as was saying that we are taking a bunch of subsidy administrators and we are trying to make them development experts. And they are not that. And that's what we do with a lot of these things. So if you're going to bring, and I think you need a very different model. So the debate around, for example, the local government white paper and what it can and can't and won't do and should do is going to kind of give us a stark reality of where we are and what is needed. And why is it so difficult? It's because it's just so different. It's not a one-size-fits-all approach. What may work, and maybe that's one of the things we have to do with OV, say, why did it work in the places that it worked? And one of the things is that when you have one national department, one state-owned company to deal with, it's very different than having to deal with, in the case of spatial transformation, I don't know, 3 national departments, maybe 4, 5, 100 provincial departments and 257 municipalities.
All right, let's open it up to our audience. We've identified 2 people on that side of the room and 1 over there. What I would suggest is that we take all of those questions and then answer collectively so that we can lead to our conclusion. Please go ahead, ma'am. If you could just identify yourself and your organization and be concise, please. Thank you.
Okay. Good morning to everyone. My name is Dr. Lerato Nkosi from UNISA, from the Economics Department. As much as I've heard a lot of the factors that the panel has spoken about, I'd just like to ask, in keeping with with the concept of social exclusion and trying to service those underserviced communities, and also in trying to make sure that there's a balance between efficiency and equity, has the panel considered the fact that social welfare can also be a disturbance or, for lack of a better word, to the fiscus?
Thanks, Dr. Nkosi. We'll take the second question.
Thank you so much. Good morning, colleagues. I'm Omkholo Tlape from Northwest Provincial Treasury. Mine is on the first round of questions that was asked. And there's one speaker who spoke about politics is eating economics. So I'm asking to myself, is it not supposed to be a base as economists to now focus into political economics before we can touch other aspects of economics? Because that is a base. We can come up with, brilliant researches and outcomes. You must remember those who are coming now from Treasury. When you table a budget, you are making that budget a law. So with our researches that we are conducting, are those recommendations binding? And the other thing, where are we getting it wrong as South Africans, as economists, to link our outcomes of our research with implementation? Because we've got brilliant ideas, we've got brilliant strategies, and not to mention NDP, because now NDP, it's targeted something that we are not getting the actual results. Now, should we still look into NDP or not? Something that was established in 2012, we are sitting with that. But now, the issue is things are getting south. Lastly, the issue of there's one who said the economy is excluding a lot of people. But now, when you look into the population pyramid of South Africa, we've got a large number of working age population. But at the same time, you look into the police industry, we've got shortage of police officers. Nurses, we've got shortage of nurses. You talk of
all right, I'm
teachers.
going to ask you to conclude.
Now, the issue is, as South Africans, do we still need to pump in terms of expenditure, in terms of research, while the budget is leaking? Or should we address the leakage, then we can pump whatever that we want to pump to grow the economy? Thank you so much.
Thank you so much. There was a question on the side of the room, and that will be the final one for this run, because we have run out of time, I'm afraid.
Are we going to take, is this the last one?
Yes, that's the last one for this round. Thank you.
Hi, Siobhan Redford. I am currently unaffiliated, but I think it's really more comments and questions. The first one will relate to what Lisa and Philippe were speaking about. And Philippe, as much as you're speaking about university, I think when I think about education in South Africa, we need to start at the beginning, like really at the ground level. I've spent some time teaching extra maths. I've been doing it since I was young. And I would love to see us think very holistically about our educational system. What do we need in the, let's go radical. If this keeps going out, I'm going to speak without a mic. And for me, the concern when it comes to education particularly is it's a very long kind of run. And that's where what Lisa said at the beginning, it's about the politicians. Education's not politically sexy. You don't get a result in one term. And that always worries me and bothers me. And the thing is, when you look even at the private sector, I mean, what's driving them doesn't always make sense. We're not producing the best we can out of our people. I think there's a lot of potential that's been wasted, at all levels. Right. Then my second comment comes to infrastructure and kind of early warning systems. So Mamokete and Ulrika. I think, I suppose in some ways I am slightly, sympathetic to the National Treasury's issue here, which is that, a lot of this does fall, let's say, to local municipalities, and especially when it comes to water. And what we do know is that you just don't have people with the knowledge or the skills to be running that, let alone identifying where the issues are. So I don't know if it was as much of a choice as it could or should have been, but yes, it's definitely something that needs to be fixed. Thank you.
Thank you so much, and we really appreciate your engagement with our panel on those questions. Again, it's only in the interest of time that I've had to wrap it up quite quickly. You'll have an opportunity during the tea break. Please grab them for if you'd like to deliberate on other issues in some detail. But I'm just going to zip around the panel now for their responses to some of the questions that have been put to you. Philippe, we'll start with you.
So I'm going to quickly talk about the education one. So yes, we're not doing well when we look at the polls and the TIMS tests. We're usually bottom of the class. And so you're quite right, we need radical change there. It's structural also, so if you think 10 years ago, now this year, the Volmink report came out about the power of unions in education and how that plays a big role there. We need to look at that. We need to look at teacher training and capacity. And we need to look at early childhood development. Somebody mentioned the News 24 conference last week. The Minister of Education there made a strong point that we should not just look at the matric pass rate, but it should actually start at looking at the grade R's to ensure that they learn to read with meaning. So that's where the big interference should come from. But then also I think on an adult education side, learning on the job training and so on, our CETAs has not been working well. The president announced that he wants to get rid of them. But we need to look at the model there so that the actual learning can take place, technical education, all of that. I'm fully on board with you in terms of that. And just lastly, on the outcomes of research and linking that to implementation, somebody was talking. I think that is what we do here with SA Tide, is trying to bring these two communities together and to really integrate them to one project.
As the Grinch who stole Christmas, because there was this massive fiscal consolidation, and that was the project. And then halfway through, he sort of like was a relaxed guy who was giving, tax relief to consumers. And right at the back end, he was a Mr. Delivery guy. And he was driving this little motorcycle, and he was delivering grants, basically social protection across the board. And I think that really spoke to the sequencing, at least of reform in that era. It's not to say that's the kind of thing you should follow, the trajectory you should follow, but it really split it up very clearly for me. And I think it speaks to the question that was asked by Dr. Nkosi about, social protection versus fiscal sustainability. And I think it really speaks to the idea that, you've got a lot of people that are unemployed. There's a big need out there, but there are constraints from a fiscal perspective as far as what support you can provide. And it's important that we, even in that provision of that social support, we're very, very targeted. I also wanted to say a little bit about the political economy and political constraints. And we spoke a little bit about municipalities and how those become even more overwhelming at that level relative to where we were. But I also think, we're going into a very different era politically in South Africa, and that creates, space to innovate. So conferences like this, instead of them being, I know that SA Tide is in combination with, or at least in partnership with National Treasury, but this is not the ANC's National Treasury, it's not the EFF's National Treasury, it is our National Treasury. This work that we're doing as South Africans, it's our work. It doesn't belong to any political party, and these are our public servants, and guys, we do respect you guys do fantastic work. And this is a platform for us to create an agenda so that the next political formation, whatever it looks like, we tell them what we want. So we're here working with our civil servants to get on the agenda the things that matter to us. And hopefully that's a different type of politic. And we have an opportunity to do that.
Thanks. Lisa? I'll be very brief. And I'll throw it back a little bit like Mama Katie's doing. So on the, Dr. Lerato Nkosi, you said there needs to be a balance about efficiency and equity. And maybe we haven't got the balance right. And I'd imagine that's the challenge of the next 2 days, is what is that balance and how do we get it better? I'm not going to give a view on that. The other issue is raised here about, why we've got such good policies but we don't implement them. Again, I think the question is, do we really have such good policies? Because if we had such good policies, maybe they'd be more implementable. Or maybe, to this audience, it's that the policies we have do not follow the research. And I just want to give one example. I think towards the end of 2024, there was this big furor about spaza shops, and spaza shops must be registered. And the COCTA minister issued a draft regulation, and all the cities committed to the president by this day, they'll register it. What did Dada Marera say last week? They identified 13,500 spaza shops. 200 have completed the registration. I rest my case.
Ulrika, we'll give you the last word.
I don't think I can... Anyway, there's a couple of things I think are important here. We must understand what the objectives of public finances are. Public finances, and there's a strong component within all of that to redistribute. So as much as there's this equity efficiency trade-off, we mustn't forget why we do what we do. And if we do it really well, then we won't necessarily have the problems that we do. So as much as it exists, it's not just the balance, but it's about understanding the linkages too. the point just around, let me first talk about just education quickly. I mean, and this thing around understanding the politics around what it is that we're doing. 5-year-olds are not able to mobilize themselves in the same way that 15-year-olds, 25-year-olds are able to do. And the thing around kind of understanding what it is that we're doing goes back to my earlier point, is we must be careful not to try and fix kind of political problems with technical solutions. But one of the things that we maybe also don't do as well is that we think that there are political solutions to technical problems. And fixing all of that would then help us just kind of move forward around the common objective, around how do you kind of create kind of prosperity for everybody.
Ladies and gentlemen, Ulrika Britton is Deputy Director General Public Finance in the National Treasury. Lisa Seftel is an activist and advisor. Mamokete Tijana is a global market strategist and also sits on the Presidential Economic Advisory Council. And Philippe Berger is the Dean Faculty of Economic and Management Sciences at the University of the Free State. Please give them a warm round of applause.
And of course, she is Nikiwe Bikicha. A round of applause, please, as they make their way off stage. So just a few announcements. I'm going to try and keep it as swift as possible, but I need you to all please listen carefully so that we can make up time. We are going to break into coffee break very shortly. So coffee break is going to happen until 11:30. So coffee break outside on the lobby until 11:30, after which you'll then go into the parallel session block 1. We have 2 blocks throughout the day. So please ensure that you are listening to the titles in case you haven't then followed the program. The first block, oh my goodness, I am aging. I cannot read this. So the first block is labor market adjustment and the lessons for labor market policy, which will happen in conference room 1. We'll then also have the second one, firms, productivity and competitiveness, which will happen in conference room 2. Now, conference room 1 and 2, this room will be split into 2. So conference room 1 and conference room 2. If you choose those, rather 1 and 2. So if you choose those, you stay here. Then the third one for block 1 will be taxation and distributional trade-offs, which will be conference room 3. Now, if you choose conference room 3 or 4 topics, you then go upstairs to level 1, and the rooms will be up there. Bear in mind, I've only mentioned 3 topics for block 1. There are only 3 for the block 1. So those will run from 11:30 until 1 o'clock. Then you can go to the restaurant, which is right by reception area, and you can have lunch. We'll have lunch from 1 until 1:45. Then from there, we go into block 2. So I'm giving you a lot of information. Write the ones you're interested in, because you won't get that information again. So write the ones. When we go into parallel session block 2, we then have 4 topics: growth, redistribution and fiscal space, which is conference room 1, which is here. Operation Vulindlela panel discussion, conference room 2, which will be here. We then have firm level trade dynamics and policy levers, tariffs, taxes, and competitiveness, will be meeting room 4 upstairs, and macro financial perspectives of South Africa's energy transition, conference room 3 upstairs. Those will then run from 2 o'clock until 3:30. After which we will all gather, but not back in the room. We'll gather just outside there in the lobby, and then I will explain further, because I think it's too much information to take in now. For now, all you need to know is coffee break, pick the topic you want and the correct room, then we go to lunch, then we break into 4 topics, and then we will move then to the lobby. So that brings us to that. Earlier on, we asked you to please grab a number. If you didn't get a number, please just meet us there in the corner and just go to the fishbowl and grab one. Keep it tight. I'll tell you what to do with it once we meet in the lobby again a little bit later. So just keep it tight there with you. I did ask some of you to please start, I'll say some because some are not on social media, but for those who are on social media, I did ask us to please start posting, so please do take time to do that. And please do use our hashtag SA Tide, but I would like for you to please also tag UNU-WIDER. I have gifts to give away, but I have nobody to give it to because nobody's posted anything. So I'm hoping when we meet again, I can give giveaways, but please remember to tag UNU-WIDER. Now I'm going to call a couple of names. I'm going to ask the following people to please meet me at the back now before you go to break, because there's a little something we need to put together with you on videography. So Joshua Butlander, Roy Haverman, Tim Collar, Winnie Lengobeni, and Dumisang Luate. Please come and meet me there by the table so that we can then do what we need to do with you on videography. That's it for me. Enjoy your tea break and see you later. Cheers, everybody.